Hi guys, welcome back to the channel. So today I'm going to talk about some of the adjustments I made to my portfolio since the last time I posted a video. Okay, so this is my portfolio previously on my previous video. If you want more information, you can go back to find out more. So these are some of the adjustments that I've made. So I sold Align, Google, and also Nasdaq. They are all sold at a profit of 20%, 59%, and 52% profits. And instead of them, I bought new company such as Synosis, Tesla, and Palantir. Okay, so what you're seeing now is the new adjusted portfolio after I sell off and buying some new stocks. So why did I do the adjustments? First reason is because I see that there's a slowing down of the growth potential of the company, especially for Align. Initially, Align was doing great, their growth potential is great, until recently it start to drop and even slow down a bit. And India only made 20% profit out of it. So why did that happen? Because perhaps that people are getting more and more less afraid of the pandemic, they are going out to do their dental treatments. So at as the start, a lot of people return back to do their dental treatment. Towards the end, most of them has already done it. So this is why we see that the growth potential of airline has slowly come down. Next is because of the change of fundamentals. Like I say again, because the less fear of the pandemic, that is why that line is starting to slow down. And lastly, I see better alternative stocks. So actually, the other two stocks that I sold, Google and Nasdaq, they are great stocks. And Align is also a great stock. It's not because of their fundamentals are bad or anything. It's just that I see better alternative in the other stocks that I bought in. Okay, why Synopsys? So they are actually a company that provide software for chip designers such as NVIDIA, AMD, and ARMS. So the companies such as NVIDIA will use their software to design and actually test the chips. And then I see that there will be rising demand for these chips in the future. It's because maybe like 10 years, 20 years before today, when you tell somebody that a vacuum cleaner will become a smart vacuum cleaner, they can store data, or your fridge even has screen to tell you what is it, people will laugh at you. However, today you see all of these devices actually getting more and more smart. And I can predict that maybe in the future, more and more things will become smarter. Maybe our cabinet will have like electronic devices and there might be smart chips inside. This is why I see that the demands of chip will actually increase over the years. And they are also a market leaders in this class. And however, the only risk that I see is because you have a strong competitor such as Cadence Design System Inc. So in terms of fundamentals, everything they are very similar. So it might be another company to look up for. However, if you check their growth in terms of when the beginning towards here, you can see the Synosis has actually grown much more in terms of their stock price as compared to Cadence. Okay, the next stock is Tesla. So this company do not need much introduction. However, just note that this is not just a car company because they actually produce other stuff such as solar panel and also SpaceX, which is space exploration company. And they have one of the leading technology within their industry. As I can see, the EV market is actually gaining traction. Uh, a lot of a lot of countries has actually started to ban ICE car, internal combustion cars in the future, maybe in 2030, 2040. So I can see that EV will only get more and more important in the future and will play a higher role in our transportation industry. However, the risk that Tesla has is the key person risk. As we know that Elon Musk is one of the head figures of Tesla, so you can only imagine if anything happened to him, the Tesla stock is gonna plumb like crazy. And they are also under immense head pressure. So as you know that every time Tesla got into accident, or catch fire, it becomes such a big headline. However, you can see that the ICE vehicles such as Toyota, Honda are getting into accident and bursting into flame every other day. However, nobody makes a big fuss out of them. So you can actually see that there's an immense head pressure on Tesla. Okay, so the last company I'm going to talk about is Palantir. So firstly, as we know that Palantir actually have a lot of government contracts. This actually means that they will be protected by the government if something happen. So the government won't let them fall so easily because most of their military information inside is all with Palantir. So they uses their software so much that there's a heavy reliance. Next, because they have private works with government, and we all know that government make use of a lot of data to process and to find out about some unique analytics. So in a way, Palantir is trained to handle data and to might create new sort of analysis for their future commercial clients that other companies might not be able to do. And they have impressive software. Their software actually help banks to fight money laundering activities and also help with military navigation, help with fighting terrorists. And there's many other potential. Maybe they can use it for space exploration, you know. And imagine what it can do if it gives a financial institution this software and the institution can use it to predict the future stock markets. That will be a lot of potential for it. And because Palantir is so well integrated, right? Their software is so well integrated into businesses. They when businesses want to change to another company, right, they'll be incurring a lot of high switching costs. So once a company is tied in with Palantir, most of the time it will tie in for a long time. And one of the most important points is that its meme status is starting to wear off. Whereas we know the beginning of this year, I mean from last year, Palantir actually have a stocks actually skyrocket. This is because of the meme status it have. However, as of recent days, we can see that it actually dropped a lot. So its meme status is starting to wear off, and it's become safer to invest in them. And lastly, one of the key risks is that their commercial offerings are recent, so we have not really seen how it's actually impacting on the market and how much the market is really ready to accept Palantir. Okay, so in conclusion, I will be doing dollar cost averaging on my portfolio, so I will be pumping in money every month, regardless of whether the stock rise or stock drops. One of the key way of investing is actually dollar cost averaging. And I'll also be buying dips if I see any opportunities, like one of these company drops, its price drop because of some news. As long as its fundamentals does not change, this company should be doing fine and should be growing well, at least for the next 5 or 10 years.